Tesla earnings and revenue falling short of estimates. The stock fell on the news, but has since rebounded, up about 2.5%. Joining us now, Garrett Nelson, CFRA Research Senior Analyst. So, Garrett, what do you make of the moves given kind of the fundamentals relative to some of the commentary on unsupervised full self-driving, robotaxi updates, humanoid robot? Is that really what investors are paying attention to?
Yeah, thanks for having me. So I think what we're seeing is, once again, investors continuing to be very forgiving of the plethora of near-term challenges facing Tesla. Here you had a sizable miss, both on the top line and the bottom line for Q4. You had disappointing vehicle sales growth for the quarter. You have EV prices under pressure. Their average sales price was down $3,000 from Q3, more than $3,000. And you had management seemingly back off their prior vehicle sales growth guidance that they provided for 2025. And that's because investors are more focused on the long-term opportunity in autonomous driving. And there was good news there. They expect to launch unsupervised full self-driving in the Austin market by mid-year. And so I think investors are still very focused on the long-term opportunity in the stock. And we think Tesla is very much on track there. And I would describe Elon Musk's tone on the conference call as beyond optimistic. It was really euphoric. And so, that really fed the move in the stock after hours.
Yeah, I think euphoric is a good way to describe it. You think the change in outlook is a positive for the stock? Do you think it's more attainable for this company?
Well, candidly, Elon Musk has a long history of not exactly hitting certain guidelines, not being on track. And so, but this is so near term. I mean, you're talking in the next 5 to 6 months that we do think that it's a catalyst that's right in front of us. So, despite the stock's run up, really since the election, we still see more upside here, and that's why we reiterated our buy rating. And we see over 35% upside in the stock here over the next 12 months. It's really incredible when you look at, and we've been tracking the improvements that they've made in their full self-driving software ever since incorporating AI into the development throughout version 12, and now they're on version 13. It's really been staggering, the improvements that they've made. Their vehicles now come right off the production line and drive themselves to the loading dock for delivery to customers. So it's really pretty incredible what we're seeing.
Garrett, you mentioned, you reiterated your buy, raised the target. But I mean, to say that investors are focused on this, the imagined huge future opportunity is a bit of an understatement. Your price target of $540 a share is 140 times 2026 estimates. Now, you've had to reduce estimates for this year and next because the car business obviously is struggling just a little bit to grow. We have a $1.25 trillion market cap on Tesla. Waymo raised capital at like a $50 billion value last year. I mean, you can't even find Waymo within Alphabet. So why are we giving, how much of Tesla right now is them catching up and exceeding Waymo tomorrow?
Yeah, it's really, and that's 2026 earnings. You really have to take a longer term, intermediate term view of the earnings potential here, looking out towards the end of the decade. And when you look at it, say on 2029, 2030 earnings, the stock looks quite inexpensive still. And we really think
what has happened to the 5-year expected earnings of Tesla in the last 5 years?
So they're much closer to
they've gone nothing but down.
Well, the story here is they're going to transition from being a very low margin, relatively low margin auto manufacturer, inherently a low margin industry, to being a very high margin software sales company, essentially, as the full self-driving value becomes more apparent to consumers and as demand increases. So that's how we see it. We think the margin opportunity, margin expansion opportunity is very significant looking out over that time frame. And so I think investors are still focused, at least a few years down the road, and we are as well.